Hey everyone, my name is Ricky and welcome to Peaceful Investor. This channel is about simplifying investing and achieving financial freedom. Before we start, I'm not a financial advisor. Before buying, please do your own due diligence. And today we are going to talk about one of my investments, Novo Nordisk, and they just posted their Q2 2025 earnings. Let's deep dive and understand what they brought up for us. We are looking at Novo Nordisk financial results for the first 6 months of 2025 from January through June. Starting with net sales, the company brought in DKK 154.9 billion over the 6 months period. That's up from DKK 133.2 billion in the same period last year. In other words, sales grew by 16% in Danish krone and by 18% when measured at constant exchange rates. The constant exchange rates means Novo is showing us growth without the impact of currency swings. Exchange rates can make results look bigger or smaller just by converting dollars, euros, or yen into krona. CER strips out that noise and shows the real underlying demand. Moving to operating profit, basically profit before tax and interest. Novo earned DKK 72.2 billion in the first half of 2025 compared to DKK 57.8 billion last year. That's growth of 25% in krona and 29% at CER. This tells us Novo is not just selling more, but also running the business more efficiently, turning sales into profit at a higher rate. Now looking at the bottom line, net profit came in at about DKK 53.8 billion versus DKK 43.4 billion last year. That's a very healthy double-digit increase, showing strong profitability even after all the expenses, taxes, and financing are taken into account. Finally, for the shareholders, earning per share EPS were DKK 12.49, up from DKK 10.13 in the first 6 months of 2024. That's a 23% increase year on year. It means each share of Novo is earning more than it did a year ago. So to sum up, the first half of 2025, Novo delivered double digit in sales, operating profit, net profit and EPS. Growth was stronger once you adjust for currency effects, thanks to the continued success of their obesity and diabetes treatments. And in the next slide, we will dig deeper into these numbers to see what's really driving this performance. Now let's slow down and take a closer look at Novo Nordisk's performance when we compare the first quarter to the second quarter of 2025 and also against the same time last year. This helps us see not just the short-term movements but the bigger trend. Starting with net sales. In Q1, Novo made about DKK 78.1 billion and in Q2 that number was DKK 76.9 billion. That's a small dip of around 2% quarter on quarter. At first glance, some investor might see that as a warning sign. Sales slowing down after such a strong first quarter. But when we step back and compare to last year, the story changes. In Q2 of 2024, the sales were DKK 68.1 billion. So which means Q2 this year grew by 13% year over year. That tells us the business is still expanding strongly, but not accelerating quarter to quarter at the same pace. Now let's look at the gross profit and gross margins. In Q1, the gross profit was DKK 65.2 billion, and in Q2, it was DKK 64.0 billion. Again, a slight decline, about 2%. But against last year Q2 gross profit of DKK 57.8 billion, this year's result is up 11%. And the gross margin, which shows how much profit is left after the cost of making the drug, was 83.5% in Q1 and 83.3% in Q2 compared to 84.9% last year. So, yes, margins have slipped a little, but let's be clear, over 83% is world class. Most companies would dream of margins like that. And it shows Novo still has tremendous pricing power and efficiency. Moving on to operating profit or EBIT, this is where we see the biggest change. In Q1, operating profit was DKK 38.8 billion, and in Q2 it dropped to DKK 33.4 billion. That's about 14% decline quarter on quarter. The operating margin fell from almost 50% in Q1 to 43.5% in Q2. Now, why did that happen? A couple of reasons. The company is spending more on sales and distribution, especially promoting Wegovy and Ozempic, and also on expanding globally. There is also some timings in R&D expenses, meaning certain research costs landed more heavily in Q2. But if we look at the year over year view, the Q2 2024 operating profit was DKK 25.9 billion. So this quarter, DKK 33.4 billion represents a 29% increase. That's a big jump, showing the core business is actually much stronger than a year ago, even if quarter on quarter it dipped. Finally, let's talk about net profit, the final bottom line after everything. In Q1, the Novo earned DKK 29 billion, while in Q2 it was DKK 26.5 billion. So that's about 9% lower. But again, the year over year picture is very different. The last year in Q2, the net profit was DKK 20.1 billion. So this year, the figure is up 32% year over year. So that is a huge improvement. And it means that despite spending more, Novo is still delivering more value to shareholders compared to last year. So, to bring it all together, comparing Q1 and Q2, we see a slight slowdown. Sales are a little lower, margins are a touch softer, and operating profit came down. But when we zoom out and compare Q2 to last year, and growth is very strong. Double digit increase in sales, gross profit, EBIT, and net income. And here is what matters if you are thinking like an investor. Quarter to quarter numbers can move around due to timing of expenses or one off adjustments. But the real test is year over year growth. And Novo is passing that test with flying colors. They are keeping margins above 80%, growing profit faster than sales, and returning more earnings per share to shareholders. As an investor, that's exactly what you want to see. A company that may face short term swings but is constantly compounding value over the long term. Now, after the income statement, the cash flow statement is very important because cash flow statement tells you how the actual cash moves. Income statement can be manipulated, but cash flow statement never lies. So In this slide, let's walk through Novo Nordisk's cash flow statement, which shows how money actually moved in and out of the business during the first half of 2025. We start with net profit, which was DKK 55.5 billion in the first 6 months of 2025 compared to DKK 45.5 billion last year. So the profit went up sharply, but when we adjust for things like taxes, depreciation, and changes in working capital, Novo generated DKK 65.4 billion in operating cash flow, almost same as last year. So why was operating cash flow flat even though the profit grew strongly? The main reason is working capital. This includes things like receivables, payables, and inventories. In 2025, Novo had a negative impact of almost 11.7 billion from working capital compared to small positive effect last year. In simple words, more cash was tied up in running the business. For example, higher receivables and inventory levels that offset the boost from higher profits. Next is investing activities. The biggest item here is property, plant, and equipment or capex. Novo spent DKK 28.1 billion in the first half compared to DKK 18.9 billion last year. So this step up is all about expanding production capacity to meet future demand for obesity and diabetes medicines. Overall, investing cash flow was DKK 20.9 billion, more negative than last year, DKK 16.8 billion. On the financing side, Novo paid out 35.1 billion in dividends, higher than last year, which was 28 billion. Share buybacks, however, was almost paused, only DKK 1.4 billion this year compared to more than 10 billion last year. That's because management wants to conserve cash for expansion. On top of that, the company raised DKK 72.6 billion in borrowings but repaid DKK 76.9 billion. So the net effect was an outflow financing activity overall was DKK 40.8 billion compared to 9.7 billion last year. So put together, the picture looks like Novo is generating consistent cash from operations, but it looks flat compared to last year because more cash is tied up in working capital. At the same time, company is investing aggressively in capex and still paying strong dividends while pausing buybacks to prioritize growth. So as an investor, operating cash flow being flat isn't a weakness in demand. It's about cash timing and working capital. The business remains very healthy, and the heavy spending today on capacity is meant to secure bigger growth and cash generation in the future. Now let's look at Novo Nordisk's free cash flow. This is one of the most important number in the report because it shows how much cash the company actually has left after running the business and making investments. Free cash flow is the money that can be used to pay dividends, buy back shares, or reinvest in growth. In the first 6 months of 2025, Novo generated DKK 65.4 billion from operating activities. That's basically the cash coming in from selling medicines. But the company also spent heavily on investments, also DKK 20.9 billion. And there was also outflow for things like marketable securities and lease payments. After all of that, the final free cash flow was 33.6 billion compared to 41.3 billion in the same period last year. So the free cash flow dropped. Looking just at the second quarter, free cash flow was 24.1 billion, which is down from 36.3 billion in Q2 last year. So that's a pretty big drop, about one third lower. So why is cash flow lower? The main reason is Novo is investing much more in building new facilities and manufacturing capacities. In other words, they are using today's cash to prepare tomorrow's future growth. Profit on paper can look good, but free cash flow shows the real cash left in the bank. It's a true measure of financial strength. Even though Novo's free cash flow is down this year, it's because of planned investment, not because the business is weak. And with strong demand for their medicines, these investments should lead to even bigger cash generation in the future. Let's take a look at Novo Nordisk's balance sheet as of June 30th, 2025. On the asset side, the biggest movement is in property, plant, and equipment, which climbed at 180.8 billion from 162.5 billion at end of last year. That increase reflects heavy investment in new production facilities to meet future demand. In current assets, inventories went up to 45.7 billion from 40.8 billion, which suggests Novo is holding more stock as it scales up supply. Trade receivables were stable at around 69.6 billion, and cash rose slightly to 18.4 billion from 15.7 billion. However, marketable securities dropped sharply from 10.6 billion to just zero point 0.5 billion, meaning Novo converted those investments into cash and other uses. On the liability side, total borrowings actually came down a bit to 99.3 billion from 102 billion. Provisions, which include the big 340 billion program in US, also fell to DKK 112.1 billion from 120.3 billion. So overall, the balance sheet shows Novo is building long-term assets, increasing inventories, and keeping a healthy cash position, while at the same time slightly reducing debt and provisions. It's a sign of financial strength and preparation of future growth. Now let's talk about the part of the report that really gets investors' attention, the outlook for the rest of 2025. The Novo Nordisk has lowered its guidance. Sales growth is now expected to be 8 to 14% at a constant exchange rates compared to the earlier range of 13 to 21%. The operating growth is now 10 to 16%, down from 16 to 24%. On the top of that, management is warning that reported numbers will look even softer because of currency headwinds. So, why the downgrade? There are a few reasons. First, in the US, the use of compounded GLP drugs is still taking away demand from Novo branded products like Vigovi, and also competition with Eli Lilly. The second, the overall market is expanding slower than expected. So the growth curve isn't as steep as company had hoped. And the third, there is increasing competition both in obesity care and diabetes treatment. What does this mean for investors? In the short term, a guidance cut can usually put pressure on the share price. Markets don't like surprises, and when a company admits growth will be lower than expected, stock often pulls back. That's exactly what we have seen in the recent trading sessions. With Novo shares under pressure after this announcement, but here is the other side of the story. Novo is still guiding for double digit growth in both sales and profit. Very few global companies can say that. And the fact that margin remains incredibly high, above 40%, means the business is still highly profitable. So, as an investor, the big question is, do you focus on short term slowdown and competition, or long term story of obesity treatments becoming one of the biggest healthcare market in the world? If you believe in the long term demand, then a guidance cut might create a buying opportunity rather than reason to panic. Now let's wrap up this video. And if you quickly see the price of Novo Nordisk, it's trading at $53.75, which is undervalued according to me. And I am a shareholder of Novo Nordisk, and I also bought more on this price. But it doesn't mean you also have to buy. You can do your own due diligence. If you found this helpful and you want to stay updated, I post new videos regularly where we go deeper, not in just the numbers, but what they actually mean for you as an investor. If you Your support really helps me keep creating this kind of content and gives me the confidence to bring you even more insights every week. So please go ahead and hit that subscribe button and join me this journey to becoming a more peaceful and confident investor. Thank you. See you next time.